Hi, thank you for joining the TaxBandits webinar today, Beyond the Basics. We're exploring state withholding and unemployment reporting. My name is Andrea Jant. I'm the Client Success Manager.
And I'm Rebecca Cafaro. I am a Client Success Representative.
So today we're going to explore the following topics: state withholding versus federal withholding. How does state withholding work? State withholding requirements. What is unemployment insurance? What is new hire reporting? Best practices to employ, and keeping it straightforward with TaxBandits. Bear with me. I think we've got some difficulties. So state withholding versus federal withholding. Federal withholding is the amount the employer withholds from an employee's paycheck, and it is paid to the IRS or to the Social Security Administration. This is generally based on the W-4 that the employee fills out, filing statuses, and income pay frequency. It also can be additional withholding, multiple job adjustments, tax credits, and deductions. If you guys will just bear with me 1 second here, I think we've got a little issue with our screen. All right, sorry about that. Okay, so Rebecca, can you tell us about state withholding?
Sure. State withholding is money withheld from the employee's wages for state income. Each state establishes its own laws, withholding formulas, forms, filing requirements, payment schedules, and deadlines.
Okay. One thing to keep in mind, state tax is going to vary per state. Every state calculates their tax differently. They have their own requirements. And then some states don't even have it. So the state that you live in, those are the rules or guidelines that you're going to follow. Rebecca, why do we have both federal and state withholdings?
Okay, so the federal withholding goes to programs like military and homeland security, things like that. The state withholding goes to state level services like your schools, education, public transportation, public safety officers, state healthcare programs like Medicare, Medicaid, in the infrastructure, which is building highways and things like that.
Okay, and employees are required to pay both. All employees are going to pay federal tax. If they live and work in a state that requires state tax, then they'll pay both. Tell us a little bit about how the state tax is calculated.
So the general steps are determining the gross wages, identifying the work in the resident state, because sometimes that differs, obtaining complete state withholding certificate. That comes in your new hire paperwork. Apply the state withholding formula and tax tables. Then you withhold, of course, whatever that percentage or that is. And then the employer would pay the deposit taxes with the state.
And there are some certain situations that kind of fall into calculating the tax. There are states that have reciprocal agreements. So if you're a multi-state employer, or you have employees that live in one state, but they're commuting to your state for work, if your state and the state that the employee lives in have a reciprocal agreement, then taxes are only paid to the resident state. You also may have employees that work in multiple states, and in that situation, it's going to depend on The withholding depends on the work state, the resident state, and if those states have any type of agreement. What about remote employees?
So employees working remotely, typically their withholding is based where they're working. So if you're working in North Carolina and you're a remote employee, typically you're only going to get the North Carolina taxes. Even if your work is in South Carolina, like you work at TaxBandits in South Carolina and you live in North Carolina, you're going to pay taxes in North Carolina, not South Carolina.
So when you're calculating state tax withholding, you are going to look at your gross taxable wages, the filing status, which is dependent on how the employee filled out their state withholding form, the number of allowances or exemptions that they claim, if they've allotted any or requested to have additional withholding, and if they're eligible for any type of state deduction or credit. There are some special taxations. Can you tell us about the graduated income tax?
Okay, so that is when your tax rates increase, it's when your taxes increase, your taxable income increases. So examples are California, New York, and Oregon.
But basically, it's like the more you make, the more you're going to be taxed.
Yeah, exactly. Exactly. The state is going to get their money, as well as the federal. They're going to get their money too. Flat tax is one tax rate applied to all taxable income. Examples of this is like Colorado, Illinois, Kentucky, North Carolina, and Utah.
And then we do have some states that don't have income tax at all, and they're listed here on the screen. So if you live in one of these states, you're lucky. You don't have to worry about state withholding. What about unemployment insurance?
Unemployment insurance is a federally required program. It provides temporary financial assistance for those who get laid off or lost their job or sometimes fired. It's state administered, so the tax rates according to your state, reporting and payment requirements are again by state. So if you want more information on that, you can contact
Go to your
us.
state.
Yeah.
Okay. So state withholding versus unemployment insurance. State withholding, the taxes are withheld from the employee. Unemployment insurance, the employer typically pays it. The deadlines for these is usually quarterly. How is that unemployment tax calculated?
So it's typically calculated on taxable employee wages, state taxable wage base. Again, you have to contact your state for that. Employer assigned tax rate, and then basic calculation is taxable wages times employer unemployment insurance tax rate equals what your tax would be due.
Okay, and state forms and portals. Each state is going to have their own portal. You register when you start your business. You should register on the state website. You can use the portal to make payments and also to file reports if you want to do them yourself. Normally, when you're starting a business, your state is going to assign you like a new business unemployment insurance rate. And this rate will adjust based on your business activity. And normally they do send you a letter the end of December or early January telling you if your rate has changed. But if you don't get the letter, you can always log into the portal and it will be there as well. So what about new hire reporting? What is that?
New hire reporting is reporting newly hired or rehired employees. The program supports like your child support enforcement, fraud prevention, maintaining accurate employment records, sorry about that. And it's federally required.
So it's a federally required program, but the state actually files the report. They are responsible for reporting either the new hire or the rehire. They're responsible for keeping up with those reports and following all of the deadlines that are mandated by that particular state. Um, what's generally reported on the new hire reporting?
So it's like your employee name, address, social security number, then of course the employer information, the date the employee was hired. The deadlines is typically 20 days after hire. There are some variations between the states, so you would really want to contact them to make sure you know what you need to file and when.
So some common mistakes that you're going to want to avoid. Obviously, you want to meet all of your deadlines. Incorrect employee information can also cause a problem. This is it's really important if you have a rehire. Just because somebody worked for you in 2023 and they're coming back to work for you in 2026, a lot could have changed. Their address, maybe they've married or they've had children. So all of that information needs to be updated. So that if when you're doing the new hire reporting, you have correct information. You want to make sure that you are aware of where your employees live versus where they work, because you don't want to overlook any multi-state requirements. You want to make sure that you are withholding and reporting those withholdings to the correct state. And you want to make sure that you're error-free before you submit any filings. What's a good way to stay organized?
So I would staying organized, maintain your employee records, track your deadlines, follow up with state requirements. State requirements typically change every year. So make sure you're checking on those, make sure no deadlines changed, anything like that. Review information carefully. So you want to verify employee details, make sure nothing changed, like you just stated. And then tax forms, you want to make sure that you're reviewing those before you actually file them. And then the filing information that's actually on the form. So you need to just make sure you're checking, double checking, triple checking your information before you send it on.
And that's one good reason to use TaxBandits. If you use us for your filing needs, everything is located within your TaxBandits account. If you need to refer to old filings, those are there as well. And when you're actually filing your forms, we do have an audit system in place, so it should catch most of the errors. Like if you didn't fill out if you didn't put a number on a space on a form that should have been there, it won't let you move forward until you've addressed that. You always want to make your corrections as soon as you discover that something needs to be corrected, and you also want to amend as quickly as you can. What about our state filing compliance?
So we do support federal and state filing, and ACA reporting, new hire reporting, payroll, tax submission, preparation and submission, tracking the filing status and the deadlines. If you're ever unsure, you can always contact the support team. We're happy to let you know what the deadline is.
Yep. You'll probably get an email or 2 or 3 from us with the deadline.
Exactly.
So, state specifications, in order for us to actually allow or to offer state filing, we have to know specifically what each individual state requires. That's why if you've looked in your TaxBandits account recently, you may see where maybe there were 5 state filings offered 1 month, and then the next month there are 10. We have to go through them individually and look at all the required fields and accepted values. We need to know the file layout and formatting that that particular state is going to accept and how they want that information validated. When we transmit the information, each state has a particular way that they want that information sent. Once we have done all of our research and applied this to the TaxBandits application, it's in a testing environment, and it's tested by our developers, our tax specialist, and then even from the client perspective, we have our support team tested as well, because the support team knows more about what a client is going to ask, whereas the developer is going to know more about what the state is requiring. So we put all of that testing together and everything is approved. And once we get the green light on all of that, the state filing is opened up for our clients. This is just a little diagram that kind of goes over that process. Again, everything starts with research, and then there's several different steps that we go to before it's released into your TaxBandits account. Here are the states that we're currently supporting. There is a breakdown of withholding, unemployment, and then new hire reporting. And then this is just a little cheat sheet. Do you want to go over that?
So if your manual state filing is taking too long, TaxBandits is an e-filer. So, and we have like a connected address book. So you just put your business information in there, and then you just click your business and file your form. It's super, super simple, easy. We have, we can send you instructions if you need, no problem. Not understanding the filing requirements, we have a guided filing process and support. So if you're going through the process and you're trying to file your form and it just keeps not going anywhere, typically there's a box that's not filled. It's going to be red. It's going to have an asterisk. It's going to ask you for that information. If you still can't get through to that, please contact us. We will help you figure out which box is missing. Scattered report across the states. So if you have to file for multiple states, you don't want to have a singular sign-in for each state. In TaxBandits, you have one sign-in to your TaxBandits account. You go ahead and file your form for, I don't know, let's say Texas, New Jersey, Maine, Massachusetts. You file all these forms in one account with one email address and password.
Perfect. And then all the reports are in that one place too.
Yeah, you can go ahead and access those anytime you need them.
All right. We have a little bit of time left, so if there are any questions, we'll be more than happy to answer those. You can just put them in the chat. We do have one question here. If we start using TaxBandits to file certain state reports, do we still need to log into the specific state portals to pay the applicable taxes, withholding? Yes, at this time, we're going to transmit the file, but you will be responsible for making the payment.
And then we kind of went over this a little bit earlier, but if you are located in North Carolina and have employees that live and work remote in South Carolina, if they're remote employed in South Carolina, they would need to pay the taxes in South Carolina.
Yeah.
So I would really check with your state, though. I would make sure, everything that we were saying is correct. Because go ahead.
Well, I was going to say North Carolina and South Carolina do have a reciprocal agreement. Normally, just to double check and make sure you are withholding that information correctly and making those payments to the proper state, I would check with a tax advisor in the state where your business is located, or check your state website. Are there any other questions?
Are state withholding typically after 401k?
Typically, if you've got a traditional 401k plan, those contributions are not subject to federal and state withholding. They are subject to Social Security and Medicare. Just an FYI. I know that doesn't have anything to do with state, but I'm actually working with a client right now who didn't set their withholdings up properly, so I know that. Anything else?
If I only have one employee working in another state, do I still need to report for that state, even though it's only for one person?
That again is going to depend on your state, the state where the employee is living, and if there is a reciprocal agreement between the two states. I would recommend just checking with the tax advisor in the state where the business is located, or check that state's website.
Does TaxBandits support Illinois 941 tax reporting?
Well, let's just go back through these slides and see if they're on our list.
Yep.
Currently, we do not support Illinois. Our goal is to have all 50 states available by the end of the year. And as you can see, we're making progress, but at this time, we do the Illinois unemployment, but not the Illinois withholding. All right. Well, I think that's all the time we have today for questions. We appreciate you joining us today. If you have any questions, please give us a call. You can also email us. We do have live chat on our website as well. We have some exciting webinars coming up at the end of this month and in August. So please come back and visit with us. Thank you.
Thank you. Have a great day.